All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for November 17th, 2025. We are recording this at 4 p.m. Eastern Time, and this is episode number 503.
Oh my
So,
gosh.
yeah, 11 years doing this. Yeah. Um, so, yeah, my name is David Cosmeter. I'm the creator of TimingResearch.com. And if you haven't heard about this yet, we have a great event coming up later in the week. It's one of our Analyze Your Trade um, events. And so for that, it's half-hour sessions. I have some great analysts, including the panel for today, uh, scheduled for this event. And we're just going to look at the symbols that you request, and they're going to share their charts. And so no presentations, no set agenda, just looking at charts and uh, analyzing analyzing whatever you want. So that is Thursday, starting at 10 a.m. Eastern Time. And so be sure to join us for that. All right, so panel for today is Price Headley of BigTrends.com, who is
Good
celebrating.
afternoon.
Hi, Price.
hmm
Hey,
He's
David.
celebrating his 26th anniversary of Big Trends this week. So
Oh boy,
congratulations to him.
Oh, thank you so
absolutely.
much.
Yeah.
And then also Sonny Harris of MoneyMentor.com and Harry Boxer of TheTechTrader.com and Jim, the option professor of OptionProfessor.com, is back to moderate. So I'm going to turn it over to him.
Okay. Thanks, David. And we got a lot of action today. Plus, we got a lot of action the rest of the week. So I'm sure we got some things we're going to cover here today. The stocks had a pretty good sell-off, and it seems like the news of some of these top people like Peter Thiel and others selling out of their positions and things like Palantir and Nvidia certainly have gotten people thinking that it is possible that the market may have peaked and then the capex spending can continue. That's at least what they're acting like today. Of course, tomorrow's another day. And then, of course, some of the accounting procedures over at Oracle and over at Meta, where they're extending the depreciation from 2 to 3 years to 3 to 6 years. Some people are thinking that's financial shenanigans.
Mm.
And then finally, on in October, we had Oracle announced they were going to have a $38 billion debt offering, which I think some people started saying to themselves, hey, if they've lost confidence in spending their own money to finance this thing and they want to use borrowed money, maybe we shouldn't be so confident as well. And if you've noticed, Oracle's only gone from like $300 to $200 in a month. So there's a lot going on behind the surface. And so it'll be interesting to hear what you guys got to say. Let's start out with Sunny. Sonny, what are you seeing here on the S&P? I know you got your Sunny bands you're going to share with us, and I guess we're trying to figure out is it going to stop going down and then go to new highs by the end of the year, or what is going to happen here?
Let's see if I can share the right screen. And no, we're not, in my opinion. How do I get it to
Okay.
share that
Well,
one?
we want to see evidence, Sonny. Put that evidence up there.
Right there.
The
So I
Um,
bands.
have a new offering called
Okay, yeah, we got the bands up
Substack.
there. Yeah.
I've got Substack now, and I every afternoon after the market closes, I give a prediction for tomorrow. So far, I've been doing really well. Knock on wood. And yesterday I said if it keeps going down, it's going to cascade down. And I expect it today to be a bunch of wiggling. And so it started out the day wiggling and
Yeah, I
then it
did.
went
Yeah,
down. So
yeah.
since that's happened, I now think it's going to come down at least to the lower inner band, which is right here. You see that?
And what kind of number are we talking there? 6,600?
6660,
Oh, 60. Okay.
6660.
So it's going to hold that former low as far as you can see.
I don't think so. I think it's going to come on down past that inner
Oh, okay.
band
So
to
it's going
the
to break
outer
that.
band.
It's going to go through that former low. So the
I think so.
6630, 6650 area, that's going to break, you think?
6576.
And then it's going to take that out and then obviously run all those stops that are underneath there and get everybody
Mhm.
short. And so you think it could maybe hold up at the
Now,
6560 area?
now look at this. You see this red candle?
Sure.
It hits the lower outer band at this level, which
Right.
happens to match the lower outer band on this candle.
Sure.
That's where I think we're going. We're going to touch this candle and see if we can hold it. If we can't hold it, we're in trouble.
Yeah. Because like I say, if they take out the lows of 66.50, 66.30, that obviously would give you probably some momentum to go down to that other number. If
Yeah,
you
I
break
think,
that other number, then you're talking maybe 6,200 or 6,400.
well, I'm looking right now for 65.46.
Yeah, I mean that's the worst case you see right now.
Yes.
Yeah, and that would coincide with just running the stops underneath 66.50. You know what I mean?
Well, and you'll look, you see right here, we've got a high and then it
Uh-huh.
pulls down off of it. And then we've got another high working on that. This is what I call an attractor, which
Hmm.
is just below the lower outer band. So I think that'll hold.
Well, since you got the charts up here, let's go give you a couple of names up here to look
You
at. The
bet.
second one's going to be gold prices,
Oh,
GCZ.
I
So let's,
love gold. I do
yeah,
love me some gold. And I think it's coming down to 39.62. And then people are going to realize that they've got a down market and they're going to start buying gold.
okay. So you think the 3,900 will hold? No way we're going to break that. You don't think?
Oh, I don't say no
No, well,
way.
that's the low, the recent lows, 3,900.
Those are the recent lows. And I bought a bunch of gold today.
Okay, so you're still confident that we're meandering here, but we're not going to fall like the stock market did today.
I can't say that. I think we're going to fall to the lower inner band. I don't
Oh,
think it'll
that's
go
true.
down any further.
Yeah, that's $60 right there, right?
Mm-hmm.
Yeah. All right, and then let's throw some Bitcoin up there.
Oh my.
Yeah,
Not pretty
spaghetti,
sure.
spaghetti off the end of a table. Isn't that what they call that?
I call it a waterfall, but yeah, that looks like spaghetti off the end of a table, all right.
But I do want to point out there's 5 waves down and we're at a support level, so they may get a bounce. But I am bearish on Bitcoin.
Yeah,
That looks good to me, Harry.
Short
yeah,
short term, short. All that means is short term we're oversold, but this is
yeah.
a definite top pattern that was broken, and then we're coming down to the lows from back a few months ago that where there was a consolidation range, and a lot of times
Back,
they'll
back
roll
here.
them over and take them down there and then bounce them. But I don't think a bounce is going to do that much. Maybe get back up to about 1,005 or something like that.
Yep,
Yeah.
You
I
know
agree,
that,
Harry. The other thing I
Yeah.
was
yeah,
going to say is, isn't one of the problems, folks, that we have too much correlation between basically Bitcoin's like an aggressive tech stock. It's
Yep.
it's
Yep.
it's like it's like where do you go to hide? And per Sonny's point about gold, I'm thinking that's about the only place that acted halfway decent today. Even bonds are not acting that well right now.
hmm
And so really what you have to remind yourself of is that cash is still a position too. There's people who want to be short, but there's people who don't want to mess with shorting. And if you don't, you got to consider a healthy cash position and save some powder for after the waterfall or the spaghetti hits the floor, as you would say there, Jim.
Totally agree there, Bryce.
Money market was the best trade out there today, wasn't it? Money
I
market.
have a question
Yes.
for everybody. Every other email I get nowadays is the new dollar, S dot 1582. Gonna have a brand new Trump dollar. And they're predicting that that will take the cash and the gold out. What do you think?
I don't know. What
I,
do you guys think?
I don't see it from the standpoint of, one stock you can pull up is, I'm sorry, I don't have my charts in front of me, but I'm on the road here, but basically pull up Circle, CRCL.
Yeah, that's
Everybody's so hyped on stable coins, and Circle is the poster child in the public market for stable coins. And
right.
it's just getting absolutely taken to the shed and just whipped.
No.
I mean, it is getting destroyed. And so that just tells me that despite all this hype about stablecoin issuance going through the roof, it's not helping the stock. It's actually just yet again risk off in just about all of these key sectors. So I keep coming back to gold. If gold can hold today's low, I think you're right, Sonny, to be buying it here, because if it doesn't, I'd stop it out. I bought some as well. I just bought GLD and bought some GLD today because I'm looking at the DMI lines and the directional movement lines on a 14 bar
Mhm.
DMI, and we had a nice bullish, what I call kiss. The positive line pulled back, the negative line popped up a little bit, and it's kind of a key test point for gold right here. So gold's
Mhm.
been really good on those DMI lines, and I don't know if y'all can pull those up on the SPY, the S&P 500 tracking vehicle. But SPY showed a major change in trend on the DMIs just over a week ago to the downside. We got the one bounce last week on the bounce up on November 12th,
Mm-hmm.
right under that, that high. If we had closed above that high, it would have gone back to bullish in my view. But if it holds like it did as resistance, and how it immediately sold off after that, that was very bearish in my view, at least in the short term. So you have to remember we're above the 200 day, but the problem is we're so far above the 200 day that there's a lot of room. If you start cracking a 50-day moving average, I've seen those pops from a 50-day down to a 200-day be very dramatic potential breaks in short time frames. So that's kind of the next big line in the sand I'm watching is if that 50-day, if it rolls over too much there, that we've got a major
Oh
gap
yeah,
to fill, if you will.
here's the 200 way down here.
Way down there, right? So, and the other thing I would pop out there is that the VIX, CBOE volatility index. I always say that if you get the VIX like it is popping today from 20 to 23 plus, that if it stays over 20 and then keeps on hovering above 20 or keeps on going up to 25, 27, not coming back down below 20, that's a major fear rising indication that you need to be protecting your portfolio, because that's a demand for puts just keeps growing if VIX stays over 20. If it gets back under 20, that's usually a bull market confirmation that the worst of the fear is behind us, especially two closes under 20. So watch that VIX. If people are wondering when we're going to be out of this little short term swoon, I would say watch for two closes and VIX below 20, and then probably the fear is ebbing. But I'm worried that VIX could go up real quickly like it
Yeah, I mean,
did
the
back
trend
in.
on the VIX is
Back here.
definitely up. It went down to
Yes.
17 for like a day, and the trend is
Yeah.
totally up. So the path of
Yes.
least resistance is going to 30, not going to 15.
Right. You think back to the liberation day of April, where we went from
Yeah.
20 to 60 in about 4 sessions or something like that. It was very fast how fast things plunged and how fast volatility spiked.
You talking about back over here?
Yeah, the
Yeah.
early April
Yeah, when
period
they
there,
give it, when they
exactly.
give it up, when they give it up. You know, the
Yeah,
other thing
just
is that the leveraging of Bitcoin is showing you that when liquidity leaves the market, meaning open interest on the futures contracts of Bitcoin has tanked, the money flows into the ETFs have tanked, and that's happened in a very short period since October 10th. If that would ever to happen to the stock market for whatever reason, or the tech trade or the AI trade for some reason, I mean, the volatility could take your socks off, because the positioning. I mean, how many people would have to come out to deleverage the AI trade? It would be scary. That's why Wednesday, this guy had better come out with earnings that just blow you away. If he comes out with revenue under 54 billion, which I doubt, or if he came in with margins that are tightening way under 75%, that would shock people. So, boy, the bar's pretty darn high. He'll probably meet it, though. I mean, it seems like a lot of people are still buying into that thing.
Hey Jim, I
and
don't think it matters because I think whether they take it up or take it down, and if within 48 hours that market's going to be lower if Nvidia isn't blow away.
Yeah.
Okay. And even if
Like
it
if it
is
doesn't
blow
come into
away,
like 65 billion or something like that, right?
but even if it's
Yeah.
blow away, 2, 3 days later, the thing could turn down like you wouldn't believe. Nvidia
Yeah.
is a market leader, and if the market's going lower, Tesla and Nvidia are going to lead them down. Just take a look at their charts. And
Yeah.
number one, I totally agree with Price, but on the VIX, but I disagree with both of you guys on gold. If you
What
take
do
a
you
look
think about
about
gold, Harry?
I saw a major multiple 5-wave Elliott wave move with a spike blow off, and then a thrust to the downside on major, probably the biggest volume ever traded in GLD on the downside 2 out of 3 days. Now the rally back has come on much lower volume, much lower
And
volume.
by the way, Harry, did the rally, because I cited that the rally ended about 61.8% from
Right.
the
Exactly. I was just
$500
going to
drop.
say. I was just going to
Yeah.
say it's a perfect 618 Fib retracement, and look
Yeah.
how fast it's coming down already.
Yeah.
Um,
No,
if you
I
look at
think I think that 40-50 number is very big.
I think gold breaks the GLD breaks 360, you're going to see 340. That's the major trend line. And there's nothing wrong with a three-wave corrective move off a major high like that anyway. So I think you're a little premature, Sonny, in entering it here. But hey, you know what? It is a gap fill, and maybe they bounce them. Maybe you can make a nice little short-term trade on it, but I'd be awfully careful. I am bearish on Bitcoin. I am bearish on gold. I am not 100% bearish yet on the market, but I got to tell you, some of my biggest colleagues, including Avi Gilbert and some major players that I know that are excellent technical analysts, are all looking for the same number. All of us. If we break 65.50, and we're in the bear phase. If we don't break 65.50, if you look at the numbers, is a really big number across the board support level. And so whether it's a fib retracement or whether it's a anything else you want to take a look at from a measured move, I have nothing but negative thoughts about this market if we take 65.50 out. Now, my buddy Avi, who's one of the
I
best
don't trade
wave guys,
GLD though. I trade bullion.
Yeah.
And I hold it for years and years and years.
Yeah, it's a different ballgame.
What
was the close of gold? What was the close of gold today? Was it above 450, 40.50?
Let's look real quick.
Because that was kind of my number on the sand. I got a bunch of moving. I got a bunch of moving averages in there, huh?
40.43.
Well, tomorrow it better come right back above 40.50, or that would be not good. But
That's right.
if you're buying coins for the long term, believe me, we all know what the printing of money will do. It'll make gold go up at some point. That's for sure.
Yeah, I had GLD at 370, and then it hit a low at about 368.5. So per what Harry's saying, I'm like, it's got to hold right here on my DMI lines for a short term. My play, Harry, is basically just short term thinking. Where's the rotational money going to go if it's looking for safety? And if that doesn't hold, I agree with you, Harry. Then it's like, oh gosh, then everybody's headed for cash because there's no safe haven at all because bonds aren't performing. They're not a safe haven right now, nor any of the other sectors acting that great. I mean, the Russell's acting terrible from the small cap side. It's been lagging for the last month. And so there's just loads of problems out there. And now you're seeing all the big former leaders, not just in big tech, the big Magnificent Seven. You're seeing a lot of the other sort of speculative names that have come down.
IBM got whacked today by $8 or $9, and people have good confidence in IBM.
Yeah. So if you show I have a list called Box of Shorts.
I love that.
And there's some stocks on there that have been going down for a year in nasty downtrends that I could show you where my people have been short for a year in some of these stocks.
Call out a symbol.
Huh? Well, most recently, Root. RROT has been we were
Root
long
insurance.
Yeah, we were long all the way when it broke out and pulled back. We were long from 58 up to 170. Okay, and then when it broke the head and shoulders pattern, the topping pattern and formed the bear flag, we went short at 98. It recently dropped down to 69, and it looks to me like if the bottom of the channel holds, lateral price support at the big gap down there back in October of last year is around 62. That's my target. We take that out, we can fill that gap down to 45. This stock looks terrible. And another one is a similar company called
Well, hold on a second now. Harry, take over the screen here. Let's put your stuff up there.
Okay, hang on.
Doesn't make sense to look at Sunny stuff when you're talking about your stuff,
Well, I sent a request to share.
I already did it.
Yeah, you should be able to share.
Hold on. I'm not sure which screen it's on. Okay, here. Can you see my charts?
It's coming up.
It's loading.
Loading.
Okay, now we see it. Root.
We're good.
Yeah. Now, one of my institutional clients first told me about Root when it was $12, and he was huge long. So I put a swing on it and went vertical. We got out very early in the high 20s because it went from 12 to 28 in about 3 weeks. So I thought it was too far too fast. But look at the momentum on this one. And then it came down from the falling wedge and popped and formed another bull wedge here, right in there. When it broke out, we traded up into the high 170s. And when it rolled over and broke the bear flag, right now, look, here's a stock that's gone from 181, more than 100 points down. And it doesn't look like it's anywhere near done to me. The other one we just mentioned was SEZL, Sezzle. Look at this move.
I remember this one. Yeah.
Here's a stock that back in 23 was trading at $1.50, and they took it up to 190, 180, something like that. When it broke down here in front of the bear wedge, we went short at 95. And I told my people to cover today. Look, anytime you get a stock that goes from 95 to 49 that fast, it can be down to 25. But I don't like keeping that much money on the table. I told them to cover half their shorts and raise their stops to about 60. I just don't want to take any chances in case it has a big snapback short covering rally. But the underlying
Yeah,
technicals look terrible. I want to throw something out there. Take a look at GLD on my chart. Okay.
yeah,
This
there it
stock
is.
the GLD is nearly tripled in 2 years. Tripled
Mhm.
from one. Okay. And when I saw this fifth wave spike and reversal with a gap down, off the almost an island reversal, not quite. But when it gapped down like that, look at the volume on the downside, the all-time record volume ever. 62 million shares traded on the downside on the gap down. Then 2 days later, another 53 million shares. We're talking about 120 million shares on the downside in 2 days on the stock. So I decided to look at the first bounce, like you said, Jim, a 6.618 fib retracement right there.
Yeah, I
And
saw
by the
that
way,
one.
there happens to be a gap right there too. It went right up near the gap and then faded. If this breaks this double bottom or triple bottom down here, we're going down there.
Mm-hmm.
I see no reason. Look at the lack of volume on the rally, and look at my underlying technicals on my bottom chart here. Very bearish. At the very best they could do is go neutral on the rally. A very bearish look. My opinion. Hold on a sec. Is that you're going to see this down towards here to 345, 350. That's where I think you're going to see. Be careful with I like to trade the nugget in your GT. It's the same
Yeah.
pattern.
Is that
Same pattern.
leveraged?
Leverage.
Yeah, a two buy.
X.
Yeah.
Give me a call, Harry. When it gets down there, I'll go out and buy me some more.
Okay.
Hey, Price, I had a couple
yeah.
of questions on you. Do
Yeah.
you have anything you see in the energy market? Because one thing I've noticed is energy seems to be hanging in there as far as the shares. Now,
Yes.
today everything came off,
I
but
like the energy market. I like the energy market. There's certain stocks that look great technically.
well, I was going to ask Price. You have a couple that you're following?
Yeah. I mean, I'm very simple. I'm looking at Exxon Mobil as my
Yep.
favorite major, and the
Yep.
earnings reaction was good. And
Yep.
that's the thing in a lot of these sectors and stocks. You got to watch not just the earnings themselves. You all were talking about Nvidia, but what the stock does after the earnings, right? And IBM
Right.
kind of paused after that end of October earnings, but then it started to blow through that, and it's getting this nice little sideways action when the market's weak here, which is actually very positive relative performance. And so a lot of people say, "Oh, it's not moving." Well, it's actually killing the market while the market's going down. It's going flat. That's a big positive in my books. I love relative leadership like that, and it's kind of that little sideways squat before it takes off again. So I like ExxonMobil. I would say Schlumberger, but I looked at that chart. It wasn't really doing much. So I would say no. I'd say Exxon is just the safest. But sometimes I'll trade the OIH for the broader, kind of get a little bit leveraged on the energy services, but just not seeing as much there with those big names like Halliburton and Schlumberger as I would think.
Well,
So Exxon's
Halliburton
by
had
far my
pop and it has
favorite.
stalled out a little bit. Yeah.
Yeah, it's just
Halliburton.
not getting. I mean, part of it's that oil prices are down so much, right? So
Yeah.
the thought would be, are we going to get an oil price pop? If you watch USO, and if USO can start popping back up, then you would think that the oil services will outperform the major integrated names.
Baker
Yeah.
Hughes, even something like that too.
Yeah. Watch. I mean, I usually just watch Schlumberger and Halliburton when I'm mainly
No, they're
focused
the
on oil
best
service,
ones. They're
unless
the
I
best.
just
Yeah,
go
they're
with
the best ones.
unless I go with OIH for just total diversification. Yeah.
Yeah.
So,
Yeah.
but I mean, it's still ExxonMobil is still a decent dividend yielder, and still just kind of just chugging along. So it's due for some time in the sun after a long sideways period.
And if it gets above 120, there's nothing stopping it. So, I mean, the thing could be a real shocker next year if it get above 120. Can you put
yes.
up XOM just to take a look at XOM on maybe a weekly graph? Because it really gives you an idea. Yeah, you see what I'm saying? What's stopping
Thank you
that
all.
thing?
Yeah, exactly. I mean, it's one, and the oils, after they got just
Yeah.
decimated during COVID,
Yeah.
even though they bounced back, they still have such a low percentage institutional ownership compared to, of course, tech. I mean, and compare everything, of course, and that's what I'm thinking, Harry, about gold is that gold, even though it's tripled, it's still a tiny market cap compared
Yeah.
to even one big tech name. So it's one of those things where, yeah, sure, tech is driven what they say 75% of the market's gains since the OpenAI was announced in late 22 is
Yeah.
driven tech has driven 80% of the earnings in the S&P 500, and it's driven 90% of the capital spending in the S&P 500. So it's been somewhat justified that it's it's done as well as it's done. However, we all know that things go to extremes in the markets, and so the question is, are we there, or is this like just one more shakeout? And the big thing folks got to remember is that you can't just get locked into one view. You've got to keep adapting to what the market is telling you. If we start, like if Nvidia breaks through 200, we're showing a 14-point range that Nvidia is supposed to trade after its earnings. Looking at the front week at the money options right before the close, the 185 call and put, and basically it was like basically up to 200 down to 170 is your expected range, give or take a point. And so I'm thinking if it gets through 200, that's really good news. If it gets under 170, watch out below.
I got a quick question. Is this kind of a scheme to make things look very bad going into the Fed meeting so they almost have to cut? And then we go after the Fed meeting, go crazy through the roof because it looks like easy money is coming? Or do you think that's not happening at all?
I don't know what the Fed's going to do with no data.
Well, if they have a stock market that drops to 6,200, there'll be a little pressure on them to cut, don't you think?
Yeah.
You would
So that's
think.
what I'm trying to say. Sometimes I wonder, if this is just a little prelude to getting the Fed to cut, and then basically everything gets back on the bicycle again. We'll have to see, if that happens or not.
The other thing I noticed this past week was that the American Association of Individual Investors, the AII poll sentiment survey, went up to almost 50% bears, which is before this pullback, of course. So far that's wrong because the market keeps dropping. But it's interesting that the sentiment's been relatively bearish and kind of skeptical of the rally, which makes you wonder if eventually that gets faked out and we get another pop back up at some point. But you got to go and watch day-to-day action. You can't. Those sentiment surveys can be quite early.
Yeah.
But Price, they're always wrong. That's why people watch it. Because they're all amateurs and the individual investors. Yeah,
that's what I'm saying.
That's what I'm saying.
That's what I'm saying. Got to be careful about getting too bearish because they're all bearish.
Yeah. I know the lady who runs the New York chapter, and she doesn't sound like she's exactly a floor trader. You know what I mean?
Yes.
But Harry, do you have any other ones that you think could pop? You normally used to have some of those biotechers. Is there any biotechers on the verge of doing something? Or
well,
I know Viking was trying to break out there to 43, and then it kind of gave up ship.
Jim, I want to show you something. Look at this.
Sure.
This is the LABU biotech triple bull making new highs. Isn't it amazing? It's the biotech. But I mean, I got to tell you something though, and I think Bryce and Sonny, being both very experienced people, will agree with me. The tail end of every bull market, this happens, and then the biotechs usually aren't. They're all based on phase 3 trials and clinical trials and results. And a lot of those have zero earnings or even some have no revenues. Now, not the big ones, of course, but like Amgens, et cetera. But the bottom line is biotechs will usually, between semiconductors and biotechs, they lead the market higher. If you start to look at those three, LABU, SMH, SMH looks just like the S&P 500.
Yeah.
Okay. But the financials, FAS, check this out. A massive rounding top that broke today. I think financials lead the market.
I saw a lot of the banks got hit. Citigroup got hit and broke down to 98.
Take a look at this is a double left shoulder ahead and a double right shoulder. Or a rounding top. Whatever you call it, it's bearish because the neckline broke today. This could come down here quickly to 130. If that happens, and the semiconductors, SMH, for example, which are looking very toppy, come down hard into the 313, even 290 range, which I think could happen, you're going to see a market lower. And but what happens is the biotechs like LABU and XBI, both looking the same. Look at the XBI. Then these were so far behind the other two, and now they're leading the other two, which tells me the market is beyond speculative now. It's in a blow off mode. But internally, if you take a look at the advanced declines in up down volume, that's why the McClellan oscillator has gone nowhere and is trading around flat or the zero line and is not an indicator anymore, not really in terms of overbought, oversold. It used to be because it's based on advanced declines and up-down volume. And up-down volume and advanced declines have been mirrored by or been fooled by, I should say, a lot of the tech stocks, like Price said earlier, the Mag 7s are the top 10 or 15 that basically produce 40 to 60% of all the profits in the S&P in the last year or two or three. So
What is it? What is the clip? What is the short answer on how the McClellan oscillator works? It's based on the volume only, or is it
the only
advanced
way, no,
declines? Or
it's based on advanced declines and up down volume.
okay,
Okay, and that's strictly those two. I know Sherman and McClellan, and I know exactly what that indicator looks. If you look at it, my indicator here, you'll see it's basically today it went down to minus 87. But the only way to really use this indicator is when it's overbought or oversold.
gotcha.
Overbought is plus 130, 50, 60, 180. Oversold is minus 200, 250. On a couple occasions back here, it got down to minus worse than that. Matter of fact, going back even further, take a look at this back at 2010 and 2011 when it got to minus 475 or 480. So I'm not saying it's going down there, but we're not really oversold until we get down to at least minus 250 to 280. So right now it's minus 87. Now that could happen in a couple of days, but for me, the most important thing about the oscillator is it overbought or oversold? But right now it's slightly oversold, but nowhere near where we want to be. When I see a negative tick intraday, when I see an intensity on the tick, which I follow closely, of 13, 14, 1500 negative tick, then I know we're at a short-term low. The short-term low is always where it starts, but we can't ever call a short-term top, a long-term top or bottom until major patterns are completed, meaning tops or bottoms. Has the top been completed? Not on the S&P 500, not yet. But I'll tell you right now, if they take this line out right here, 65.50, which is
that's it.
It's
now, a quick question, Harry. What about the percentage of stocks above their 200-day moving average? I've been looking at that indicator. It seems like it's just about ready to go in the toilet.
Well, I follow the percentage of stocks over the 40-day because I'm a short-term trader.
Well, whatever. Yeah, something like that.
And you can see that. You can see that. This is the double bottom that ran at 25, 26%. We're at 28%, which means that almost 75% of stocks are below their 40. That's a definite stealth bear market already. And most people aren't willing to stay. They won't see it until the market comes down and gets hammered. That's why if you look at my box of shorts list, I have like 40 stocks on there that look terrible. I mean, they're already in major downtrends.
I've found that major market turns are all right after rolling tops.
Yeah, take a look at this one, PSIX.
Wow.
Massive top, breakdown, snapback failure. It's coming down. Look at CELH. I went short as soon as it bounced here at 44. It's now 40, but I think it's not going to be 35, even 25 again. Look at Kava. Now, look at that head and shoulder pattern here. We were short on this rising wedge right there at 96. It's down to 45, and I'm not even covered yet.
What happened to healthy Mediterranean food? Did it go out of business?
Yeah, there you go. Duolingo. Look at that head and shoulder. Look at this breakdown from the head and shoulder top, a breakaway gap to the downside, and it broke the long-term trend line. Glob has been in a downtrend for a year. A lazy boy, roll over top, and we were short when it failed and broke down underneath here. Look at this one. This is a stock that's been going up for 2-3 years.
Defense contractor, right?
This is aerospace, yeah.
Yeah, aerospace, right?
It broke down and it failed right at the gap, and it's rolled over, and I think this could get hammered. REV.
Hey, how about Teradyne? TER. Has that been hit yet, or is it going to get hit?
Well, it's right on support here. And
I say it's way up in the top area. I mean, if there was a short to be done, if it's going to drop, boy, at least you're doing it at the top level. You're doing it in the penthouse, aren't you?
Under 163, it will at least fill the gap to 150, and below that, it can get hammered down into the 130s.
Yeah.
I've
got a question. Can I ask you all a question? What about Warren Buffett buying Google, parent company Alphabet, GOOGL? I mean,
let's take a look at Google because
let's face it. The big tech stocks are still a big part of the S&P and the Nasdaq 100. So they're going to have to crack if the indexes are going to really go. So why is Buffett buying Google as a safe haven? It's pretty.
Well, they have a low PE ratio compared to their buddies. Their PE ratio was pretty low.
Take a look at this. How bullish does that look? Not at all. This is Meta. Meta's getting creamed.
Oh yeah, Meta had bad earnings. Bad earnings there.
Well, I know, but take a look at this. It's on the major trend line and a parallel channel bottom. If it breaks here, this thing could be down to 486, which would really hurt the market. Now, Apple is still in a beautiful trend, but take a look what it did today. Came right down to the trend line It's got a little pattern there. If it holds here, we can go back up and still have one more leg up. My buddy Avi Gilbert is looking for one more wave up potentially. If they don't break 65.50, I agree. But if we get up anywhere in 69.50 or 7,000, 7,025, it's gonna be on fumes. That's when the market tops. But it could be here as well.
What about Amazon?
Terrible chart because long
Sloppy.
term looks great, but it just broke key support. It had a breakaway gap that it filled, so it might bounce on this gap here. But it looks to me like it's reversed already, and it's a major head fake because it had a triple top. It broke out with a breakaway gap, and then it came right down again.
Can I say one thing?
Yeah.
Listen to Harry. His analysis is usually spot on.
Netflix, look at this. This is already topped. Came down, broke its neckline, ran right up to resistance, and quite frankly failed. And if this takes out the low here, Netflix does 107, it'll probably be 85 to 90. And if you look at the rest of this group, it's not pretty. Even Microsoft, look how vulnerable it is. If
It looks like a head and shoulder top or whatever. Yeah.
No, it's a massive double
top. What about the other big guys
what
like
about
Broadcom
Palantir?
and Palantir, Broadcom, and Taiwan Semi? Are they cracking or not? No, they're not cracking just yet.
But AVGO, again, they're all in that.
Could be though. Yeah.
If they break here, it's a vacuum down here.
No doubt.
Yeah. Palantir looks like it's already rolled over too. It actually was below this support line, and then it bounced, but today came down again. This could fall apart under 164. I wouldn't be surprised to see high 140s on this one quickly. And we in our group, we're playing PLTZ. If it breaks out above that neckline, this is the ultra short Palantir, a double short. Also, the thing to keep in mind is they've all broken through the declining tops lines or about to. So if PLTZ gets to 785, it's got to be $10, $12, $13. I just think if you look at all the quantum stocks, look at them all get killed. Look at this massive move up, a breakdown. This looks like gold, by the way. A spike up.
The Rigetti didn't look like it could be going into support. RGTI didn't look like support somewhere around $24, $23, whatever, $22.
Well, yeah, but I mean, because it's gone down, it's in half already. It went from 58.
That's what I'm trying to say. But this would be a neighborhood where it might be worth the bite.
Yeah, but I'd be careful because resistance is 28. So if you get 4 points on it, I would take it because it could be a 1, 2, 3, 4, and then boom, wave 5 comes in down into the teens. That would be a disaster. But you saw what happened to what was the other one? There's a few stocks like that got creamed. Was it QUBT?
D-Wave, QBTS. QBTS is D-Wave.
Yep. Quantum, all the quantum stocks.
Yeah.
All the nuclear stocks. Look at this one. Now
OKLO.
We're playing OKLO. We bought in the 40s. Now, when it broke out here, or here, I think it was here. Yeah. Look at this rollover, and it's right on the trend line. We break here, it's begging to be down to low 60s. This could go from 95 to 65 in a flash.
And they had bad reactions to earnings too. Like the Rigetti was a bad reaction. Rocket Lab was a bad reaction to earnings. You got to be careful about buying those dips when the earnings are bad because the institutions are going to wait another quarter before they start coming back. They're probably too committed, and so that's where you got to be careful about bottom fishing.
Hey, Price, I got a quick question on options, Price. I've never bought options on any leverage product. And the reason I've never bought options on any leverage product is it just seems like the prices are very weird. Yep. And I really can't tell, and nobody can really explain to me clearly how they come up with the actual price. And so I just have always stayed away from it because I just think the pricing of the leverage products are weird.
They are
Plus,
weird.
They seem like they're all run by some guys out in Long Island, and then guys from Jersey, like me and Harry, would know that those people in Long Island you got to watch. You know what I mean?
I agree with that. And you know the only thing is, okay, so say you buy a triple leveraged options on something that's triple leveraged. Well, that means it's got 3 times the theoretical volatility, right? Or maybe more than that if you start compounding it or whatever. But my thing is that I've messed around a little bit with moderate success, nothing that I've stayed with on buying in the monies where most of what you're buying is intrinsic value, so they can't
Okay.
monkey around with the intrinsic, and then
Right.
selling near the money so that
Okay.
you're selling a ton of volatility against not having to pay so much. That's those debit spreads is about the
Yeah.
only way I'll get interested. The problem, like you said, Jim, is that it's like trading by appointment. It's you kind of step into my parlor time, you against the market maker, and generally we don't win those battles against
No.
the market maker. They
And there's
get
so
you.
many other trades to do. You don't need to go into the one you can't explain to somebody. You know what I mean?
That's I just go more and more in my 36 years in the game. I go more and more to the top liquidity names. So that's why
Yeah.
I'm coming back to Nvidia, Apple. I
Yeah.
mean, sure, I might trade some JP Morgan or some
Exxon.
other big
Yeah.
name, and but an Exxon, a big name in a sector to kind of
Yeah.
be trading the leader. But you want to know you're trading against a lot of other traders and options, not against the market maker.
Yeah. Yeah. Yeah, no, that's yeah. I just was wondering if you're pretty much in line with what I was thinking, is that there's a lot of things to do in the market. You don't have to go into the most complex product to do it, you know.
And the most confusing one to explain to somebody is the VIX options, the CBOE
No,
volatility
that's
index
another one.
options,
Yeah, I don't do
because
that either.
they're not priced against the VIX that we all see. They're priced against VIX
Right.
futures, which you might see VIX hit up to 40 in a few days, but they might be priced for VIX coming back down to 20, and so the options are all over the place.
That's a tough one.
That's why we
Sonny, and
trade.
yeah,
I was going to say that's why I trade in my room UVXY. We did it today on the first pullback. We bought it down around 1080, and we sold it at 1180 today. It was a nice little.
but you're
Nice,
buying the actual,
nice.
security. You're not buying the options on it.
Right. This is the short-term futures ETF.
Exactly. See, if you were
Yes.
buying options on this thing, you'd know what we're talking about. There's a lot of French pastry involved. A lot of, as Judge Judy would say, a lot of who shot John. You know.
Yeah.
What do you call it, Sonny?
Yes,
You got a couple of more you want to? Why don't you take over the screen and throw a few more that you might be looking at in there while we have a little bit of time?
There was
right.
Oh, there's some
a
questions too.
question
Yeah.
from the audience.
Yeah.
Iren.
Oh boy, yeah. I had that
Another
one on
wild
my
one.
list at about, yeah, we got in there early and but it's been a while lately.
One of the things
Oh my
while y'all are
goodness.
pulling that up, I would say is that be careful for all those that are watching about thinking if a stock's been up at 80 and now it's at 40, that it's got a chance to come back and double. That's like a graveyard for people who bet against the trends, and that 40 can turn
Yeah.
into 20 before you know it. So make sure whatever indicators you're using, per like what Harry's talking about, Sonny's talking about, Jim's talking about, or myself, that whatever indicators you're using are your guide. Because you all mentioned the quantum stocks, off that last peak early in the year. That I did a little dabbling in a few of those on the way down, and I was like, what's going on? Well, it's fighting the DMI lines. There's no reason to buy it at quote unquote old resistance. It doesn't become new support. It waits until it flushes, as you all alluded to before, it flushes everybody out of this kind of buy the dip mentality, and then it starts recovering. So just it's all about timing, right? So get your indicators lining up, and don't just try to take stabs in at key old levels.
And
Yeah,
that's what
just
they
ask
mean
anybody.
by don't. That's
Just
what they
ask
mean by
anybody who
don't try
bought
to
the low
kill.
in 2000.
That's what they mean
Yes,
by don't try to catch a falling knife. I
exactly.
never go short a falling stock or go long a rising stock.
That's
That's not right.
don't fight
That's not right.
don't fight the
Don't fight the
trends. Yeah,
trend. No.
yeah,
So
don't
I'm
be
a
a sucker
buyer.
about support and resistance are really where it's cost a lot of people a lot of money just trying to take stabs at past key levels, because the trend can be just cutting right through those levels.
Oh
I
yeah.
buy when it's going up and sell when it's going down. I never try to catch a falling knife.
Amen.
And
And
you know
if
when.
this thing had a full 60% correction, you'd probably be going back to $20 anyway.
Oh yeah.
And the technical
And I
damage,
agree with you.
that's the other thing. It's the technical damage that gets done. It takes time to heal that
Yeah.
kind of damage, right? That
Yeah.
you've got to flush out the people who bought, that they're selling every bounce now, just desperate to get out of the thing. And so that's why those moves take so much time it's almost like turning an aircraft carrier. It just is slow, and it takes too much time. And especially if you're dealing with options, we don't have that kind of time. We need speed, and we don't need to get stuck in slow boats.
Larry
Hey,
Williams says it
Harry, you
takes
want to,
time to
Harry?
make money.
Yeah. Harry, you want to throw out MicroStrategy, MSTR, because obviously that's been thrown out with the bathwater. But at what point, I mean, is there any value to this thing if Bitcoin were to be hitting a low point? You see something right there, maybe?
Yeah, you see these highs along here?
Yeah, that's what I'm saying. Yeah.
You know, they say anytime a high is broken, it becomes
support.
Resistance becomes support when broken.
Right.
Now it's back to support.
Right.
Also, you have to consider, what was it recently? Well, it went from 457 to 196. Can it bounce to 230, 35? Yeah, but I wouldn't be in any stock. Just like in GBTC, Grayscale, Bitcoin. You know, Bitcoin's coming down, but look at this hit that this took. We have an island reversal up here at 99, and here we are at 71. We lost 28 points in a beautiful Elliott wave, 5-wave decline with a big spike climax. Is this going to bounce? Very likely. But would I stay long? No. I'm a short-term trader, so I'm looking for this to go 71, 77, 6 points out.
Yeah, and the other thing you got to remember is that at least GBTC is tracking Bitcoin more purely, whereas I'm not saying that I like it either. I think Bitcoin's broken and going lower, but MicroStrategy is a double whammy because they have issued all of this debt to go buy even more Bitcoin on top of what the Bitcoin they already put in their treasury is. Yeah. So they have a theoretical call coming if Bitcoin drops too far. They were saying if MicroStrategy gets somewhere down under 150 as a stock, they could be like into liquidation territory of some of their Bitcoin to basically meet the quote unquote margin call, if you will. And so that's a whole nother risk for MicroStrategy. So I would steer far clear of that.
I think it's 70, 80 points to the downside down to that line there.
That makes sense.
And it was the leverage that caused October 10th, which was the biggest liquidation of Bitcoin ever, even bigger than when those guys in the Bahamas went out of business and all that. So, I mean, the selling that occurred on October 10th was just tremendous. And, it's really a big problem still.
Hey, guys, I'm older than all of you.
No, you're not. Yes,
I am.
Not older than I am, Harry.
Well, Sonny, I'm going to be 79 December 10th.
Oh, maybe you are.
So the bottom line is, I've seen so many old school people do things that they've never done before. That bothers me. I just think the market's stopping in here. Just a question of when, whether it's now or whether my friend Mark Chaikin thinks it's going to March. He has a number. March 26th, for some reason, is the major crash day. That's what he says. Everyone has a number. Everyone has a date. I just think my favorite expression. I publish something every week called the Weekly Technical Market Briefing, and at the very end, I say the same thing every week. That is, trade what you see, not what you think. Your mind will ruin you. You got to trade what you look at. If you're disciplined, if you're focused, if you know technical patterns, you got to trade them no matter what you think. The worst thing to do is fall in love with a company and what they're doing, because fundamentally it doesn't matter.
Absolutely.
That's so true. And the other thing, we talked about leverage earlier, and everybody would usually look at margin debt as an indicator. But the thing that margin debt understates is that there's so many people trading leveraged instruments on underlying stocks on other ETFs, 2-to-1, 3-to-1. I don't know about 4-to-1s, but I know there's a lot of 2-to-1 and 3-to-1 leverage. And you wonder, is there a whole liquidation event coming where people just can't take it, where they get absolutely smacked on their leveraged instruments?
I was going to say I'm old school because and I look at things a different way. I think Bitcoin is the biggest scam ever put on the world. I really do. I hope I'm wrong. I hope it isn't. Everyone's excited about it. Everybody thinks it's the next coin. It's the next currency. I think the whole thing collapses at some point. I really do.
I think Warren Buffett and Charlie Munger would totally agree with you, Charlie, and posthumously. But the whole thing is like the biggest question is, everybody says that Bitcoin is a fixed supply. But the question is, once they hit this theoretical cap or whatever, what's to say that more supply doesn't show up magically or whatever, and there's a whole bunch more that gets dumped out on people eventually, or that it crashes even before then? Who knows?
Well, I have an old friend.
They'll use the servers that are on the moon and make more.
I have an old friend of mine that every time he sees a blow off, he calls it tulips. You know why?
Tulip mania.
Back in the big trading company in the West Indies, I forgot the name of it. Back in the 15 and 1600s, tulips went from 50 cents to $50 each, and it was one of those things where just like when silver went from 10 to $50 or whatever. Anytime there's a blow off in anything, I say Bitcoin goes from what? And so I know a friend of mine who bought it for $5, and it's 125,000 at the high at 2126, which was exactly, by the way, my price target. If you draw your lines and you do your Elliott waves, 125,000 was a major target, and we hit it. And so I'm just thinking this can come down to 50, 60,000 easy.
Yeah,
Mm-hmm.
I
You know,
agree.
I mean, look where it came from.
Just even the last correction was over 50%. I mean, that's just in the realm of normality for how
Yeah, I
volatile that
agree.
thing is.
You got a 50%, it'll be down to 62.5, 66,000. I could easily see that. For example,
Yeah.
if you look at BT on my system, it's BTC USD.
Mm-hmm.
Now, look at the long-term trend line. Basic Elliott wave, one wave, that's the 2, 3, 4, 5. And this happens to be a 1, 2, 3, 4, 5. So this is called the fifth of a fifth. And it couldn't even blow out to a new high. It kind of double top. This was 125 and this is 126. It's already broken the trend line. It's already broken price support. There's a lot of room to drop down here, even to 77,000, where there's a couple tops and a pullback low. And if you look at a Fibonacci retracement, like you said, Bryce, this thing could be 77. It could be down here in the mid 50s again,
Yeah.
very fast. If the market crashes or comes down very hard, if the S&P goes down to 5,500 or something crazy like that, Bitcoin could easily be 55,000.
I
And
agree.
part of what you're looking for too, you mentioned, Jim, the Bahamas with the whole FTX
Yeah,
blowout
FTX,
with
right,
Sam Bankman-Fried and all that stuff.
right.
You almost need to see some major blow up like that in these types of pullbacks if you're going to get some kind of a climax, right? Some kind of
Yeah.
like a forced liquidation that caused the extreme drop. And I don't think we're like Harry said, I don't think we're anywhere close to that yet. So
Yeah.
No.
that's going to be the big watch and wait, So it's kind of that whole thing, like the Jesse Livermore quote from Reminiscence of a Stock Operator. He says, "I didn't make my money buying and selling. I made my money sitting." And it's that thought that when you catch a trend, you want to let that trend run until you see those sort of big aha, ring the bell, climax, blowout type of things on the upside or the downside.
His other expression that I love and I use all the time is buy high and sell higher.
That's right.
Yeah.
When you,
Because,
and yeah, go ahead. Sorry.
I was going to say, which goes along with what you guys have been saying about, you got to be in the right trend. If the trend, look at what I have up here on IREN. This is by the way, it says capital markets, but what they are is in a cryptocurrency entity, and it's gone from 5 to almost 80, and it did it in about 7 months. Look at the
Mm-hmm.
plunge off the high. Let's just wave number one, and that could come down to 44 before it bounces to 50, and then rolls over into the 30s, bounces and rolls down to 20. All of these stocks in this they are so overblown, so over-owned. Nvidia is over-owned, but Nvidia at least has solid fundamentals. These don't, and I agree with you.
And it's like Sonny said, don't catch a falling knife. The other thing is don't average down. If you bought
Right.
something and it's down, don't think it's an opportunity to buy more. Say I'm on the wrong side, and adding good money after bad is just really compounding your error. So be careful out there, folks, about not getting caught up in the hype and the news flow of thinking that something's a quote unquote bargain.
That's right. And the buy
Well,
the dip mentality is gonna get burned, because in 2000, I remember this distinctly, when the market
Mm-hmm.
plunged off the high and bounced, everybody bought the bounce and they all got trapped.
Yes,
Yeah.
exactly.
mathematically, using an inverse martingale doesn't work. You can't add positions on the way down. You go broke.
Yeah,
Exactly.
absolutely. You can average up, not down.
All right, as we come into the top of the hour, I just want, before we all talk to everybody how they can get a hold of you, I did want to leave with one positive note in that it seems like we all agree that the 6550 to 6650 area on the S&P could very well be support. So getting extremely negative into that area and then finding that it does bounce to 7,000 might not be very helpful either. So watch that 6550 to 6650 on the S&P, see how that 100-point range works, and then before you throw out the baby with the bathwater, see that if that holds, maybe that'd be an area where actually buying would make some sense. So don't get too negative into what could be a support zone between 6550 and 6650. That could be as big a mistake as buying Oracle at 340. You know what I mean?
Yeah,
So Yeah.
The only way I'm a buyer at those levels is on the short-term basis for the bounce. But I'll tell you what, you got to watch the bounce, because if it holds 65.50 and bounces weekly or forms some sort of flag, bear flag, or coil, or something that is a
Well, no,
bear
yeah. But then
yeah,
also there's people who think it might go to 7,000 or 7,100 and then top out there. And 65.50 to 7,100 is not chump change. So that's what I'm trying
no,
to say is that,
exactly.
don't be getting too bearish into that support zone, because if that's going to be a support zone, that'll be an opportunity to make money, not just throw your towel in and forget the whole thing. You know what I mean?
And we may very well get that for a year-end Santa Claus rally, right?
Yeah, that's what I'm saying. So let's not, because like I say, the charts don't look good on a lot of things. The news is on the stocks today are not going to be very look. So it's very easy to get very negative, just like if you get very positive. So if you go into that zone that I think we all agreed on could be a support zone, monitor it. And if it looks like a good support zone, it might be time to, put your toe back in the water a little bit. So, Price, can you explain how people could get a hold of you and price and big trends and learn more
Yeah.
about options? Yeah.
Thanks, Jim. Yeah, absolutely. They can go to bigtrends.com, and we've got a free insider sign up. Just pop your email in there. Don't ask for any other information. It gets you on the free email list, and you can just start learning a variety of different strategies. You get a trend strategist ebook with a variety of trend following methods, and it's all about finding that bigger trend move. I leave the little fish, the little trends for everybody else, and look for the bigger trends. So check that out at bigtrends.com.
Sounds great. And Sonny,
Yes, sir.
how do people get a hold of you?
Sunny at moneymentor.com. I put it in the text just now. And I have a nightly Substack, tcrgsunny.substack.com. TCRG is the magazine I published for many years called Traders Catalog and Resource Guide.
And you also don't you have like a little trading room and stuff like
I
that, or
do. Thank you for mentioning that. I have a live trading room every morning at 7:30 California time.
and you bring everybody up to speed on that?
Yep.
Perfect. And Harry, you've got a great trading room you're very proud of, and it has a lot of seasoned traders in there. So how do people get on board onto your room?
Yeah, can you see my page here
I
now?
can see it. I can see that handsome
Okay.
face. Let's go.
Not bad for an old man, right?
No.
So yeah, well, my room started in July of 2001. It's now going to be 25 years. I've been doing this for over 60 folks, so I've been around a long time, and it's a very, very seasoned room with hundreds of traders in it. Some of them have been with me for 15 to 20 years. We've been trading together for a long time. We're all technically oriented. It's a technical analysis room. We don't believe in anything long term, because you never, unless of course like Nvidia, which I put out as a swing trade a few years ago at 39, it never broke a support level. So of course, if you're still long, there's no reason to sell it. But when you have a reason to sell it, you'll hear it from me, because I publish every day trade and swing trade I put out there every day has support, resistance, and targets on it, and we monitor them closely. And if I miss something, several hundred people in my room never miss it. I always hear about it. So the beauty of my room is you have several hundred eyes watching the market, watching stocks, watching indicators, and it's just a great room to be with a lot of really smart, intelligent people. And one of the things I'm a big believer in is if if a spoke in the wheel is bent, then the wheel wobbles. So, and there's nobody in my room who's discourteous, rude, or egotistical because I ask them to leave every time.
No
I want a clean room.
politics.
I want a clean room where everybody
Right.
is helping each other,
Yeah.
contributing, and that's what you find when you come to the Tech Trader. Now you can join for free for 2 weeks, no credit card. Just come on in, spend 2 weeks with us, make a lot of money, and usually you'll pay for a year or two of subscription anyway. So come join us and see what we're all about at thetechtrader.com.
Sounds good. Perfect. As far as Option Professor is concerned, we do specialize in strangles, and we specialize them going for between $100 and $300. So you have both sides of the market hedged there by buying both sides, and we've had a lot of success with that. As you can tell, a lot of volatility this year, but there's a lot of times where the options are cheap. So we tell you how that works, and a lot of people like having both sides of the market, particularly on days like today, because you thought the calls would work, and the next thing you know, you're cashing in on the puts. So if you're interested in that, optionprofessor@gmail.com is my email. Shoot me an email and we'll set you up for the free seminar we've got coming up. Hey guys, always fun to talk to you. A lot of action this week. Nvidia is coming Wednesday, and the music never stops, right?
Absolutely. Thank you
Yeah.
all.
Yep.
Thank you, David. Thank you,
And Price, nice meeting you.
Oh,
Nice
it's a
meeting you.
pleasure, Harry. Great to be
Yeah.
on with
See you
you and
all.
Sunny too. Thank you,
All
Jim.
right, you guys,
All right.
take it easy. I'm going to send. Have a good night, you guys.
Thanks, David.
Yeah. Yeah, great conversation. So, yeah, just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube or Substack or your favorite podcast app. Or you can just go to TimingResearch.com. This will become the archive for today as soon as I can get it processed. Also, be sure to join us on Thursday, November 20th, 10 a.m. Eastern Time until 6 p.m. Eastern Time. That's our next Analyze Your Trade episode. So I think we're going to have, was it 16 different analysts on throughout the day, half-hour sessions, just looking at charts all day long. So you can come into the room, put the charts you want analyzed, and so that's what we're going to be doing all day Thursday. So that's always fun. It's like a lightning round type session. It's fast, but yeah, we get to look at a lot of charts, so it's always fun. All right, so just want to thank my panel again for today. Price Headley of BigTrends.com. Congratulations on 26 years. Also, Sonny Harris of MoneyMentor.com. Harry Boxer of TheTechTrader.com, and Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you, David.